Welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets for Wednesday, the 5th of August. The European trading session has got off to a pretty decent start, actually. Markets have been fairly well stabilised in the past 24 hours or so. You've seen sort of commodity prices starting to find a bit of support, which is helping to improve sentiment. But also you had comments out from Dennis Lockhart yesterday, which, although they were quite hawkish, they were suggesting that the US economy is in a decent state, and the fact is that inflation is set to come around the corner, which is a fairly hawkish comment that would suggest that the economy is sort of progressing towards a potential September rate hike. So on the back of that, we've had Treasury yields starting to push higher. 10 years Treasury completely turned around yesterday and started to push higher on the back of those comments, and that's also driven the dollar higher as well. So we've had a dollar improvement in the past 24 hours, and certainly several of these key levels that we've been watching out for on these dollar charts are now being tested. So I'll go through them in a little bit, but certainly we have seen a bit of a turnaround in the past 24 hours. Wall Street closed slightly down for a third day in a row, actually, but to be honest, Asian markets found a bit of support overnight. You had some a decent number out of the Chinese Services PMI data, 53.8, stronger than the 51.8 we saw last month. So that helped to support markets in Asia, and then the European markets as well coming online and reacted positively as well. So we've had a fairly reasonable start. We're looking out for the UK Services PMI data that comes out very soon, and it's forecast to come in at 58.0, so slightly down from last month, but certainly still a positive number there. Then into the afternoon, we've got the US data. We've got a whole batch of US data, starting with the ADP number. ADP is sometimes seen as a bit of a harbinger for the payrolls data, and it is expected to come in at 215,000. That's at 1:15 this afternoon UK time. Then at 1:30 we've got the US trade balance. US trade balance is expected to US trade balance is expected to come in at $42.8 billion negative. So that would be a slight extension of that trade balance, trade deficit, and that could potentially be slightly dollar negative there. And what we've also got this afternoon is the Services PMI for the US, which is the ISM non-manufacturing data. That is expected just to slightly improve to 56.2 at 3 o'clock this afternoon. So potential mix of US data there in terms of how dollar supportive they could be. Right, so that takes me to my chart of the day, which is the Aussie dollar. Now we've got Aussie dollar, which has been in this downtrend since May, and we had this sharp rally yesterday on the comments from the RBA, which suggested that perhaps the Aussie dollar had sort of got to a level at which they were happy with. They weren't as dovish as perhaps the market had been expecting. And we saw a rebound in the Aussie dollar, but you can see here nothing really has happened yet. You're still in this big downtrend phase. It pretty much just hit that downtrend and fell away again. Looking at the RSI as well, not really doing much more than unwinding back towards the selling pressure, which comes in around the low 50s on the RSI. The improvement in the MACD lines is slight, but more significant in the stochastics, so that is a positive near term. But I still think that we're in this down phase, and once more, if you look at this chart here, you haven't really seen too much of an improvement yet, because you haven't even broken the resistance yet around that 74.50 mark, which is still in place. Also around the 75 figure mark, there's further resistance in place. So these levels are still intact, and I think if you look on the hourly chart, you can see this whole batch of overhead supply here that is still intact as resistance. Certainly for 74.50, 75 figure is around about that. Now you have got a very near term sort of pivot level I've drawn in here that are around about 73.25. You was supportive and then became resistance. There's a couple of slight sort of rallies through it, but still I think it is in play as a bit of a level. And this morning we've seen a move back towards that sort of 73.30 level, and we've subsequently seen a bit of support coming in, so I'd be looking out for that near term, and I'd be looking to see if that starts to break down, because it could be a continuation of this correction that we've seen overnight, really seen as since those comments by Dennis Lockhart, the dollar's started to strengthen it. And despite the fact that we've got a bit of a rally going on in the last couple of hours, I'm not sure that's going to continue too much further, and I still think that this whole Aussie dollar move is a chance to sell. So that would be how I'd be playing it. I still think there is further downside pressure in this Aussie chart, despite the fact that we have sort of bounced from that support at 72.30 area. I still think there is further pressure going to be seen on that level in due course. All the momentum indicators, all the technical moving averages are all still negative on this chart, and nothing really sort of bullish has happened yet for a turnaround. So I still think you've got to remain in the bearish Aussie dollar camp until we get some sort of real break of resistance, which we haven't really seen yet. So I'm using these rallies as a chance to sell. Anyway, I wish you good luck in your trading on the Aussie, and I'll speak to you later. Thank you.